Welcome back, everybody. Appreciate you stopping by. This is part 3 of how to build a profitable trade plan. So, the first couple of videos you got to see have built to this point. So now it's time for us to go to the charts and start putting all the information we gathered from Edgeful into play. So before we get started, I'd just like to ask, do me a favor, like the video, subscribe to the channel, and leave a comment below on what you think. It certainly helps the channel out, helps me out, and I appreciate every single person that watches my videos. So if you didn't see the first 2 parts of this series, they will be tagged right up here somewhere. Please go take a look at those. It's its own playlist at the moment, so that video that's being posted up there will take you to the playlist because it's very important to watch the first 2 sections. So this might be a little bit longer of a video than the first 2 because the more detailed we get in building our trade plan, the longer these videos are going to be. But if you're interested in the first 2 videos and you really want to see how this finishes out, then stick with me and watch it. I think you're going to find some really good information here. Okay. So on the last video, we went through the sub-reports on gold because the numbers on gold look really, really good. By the way, also, if you don't know what Edgeful is, you'll find out what it is in the first 2 videos. And I will also link Edgeful down in the description, so you can click on that link and go check them out. I am an affiliate for them, so if you do end up purchasing with them, I do get a commission off of that. It is a $49 a month subscription, but it is worth way more than what they're charging for it. So definitely go check them out. And that is a tool that will keep you on the right side of the market with the correct trading strategy based on data and data alone. And data rules the market. If you know the probabilities and you can find setups that have high probabilities to work out in your favor, then those are the ones you want to be taking. And that's why we're doing this video, because I am getting ready to start trading gold next week, which is something I never do. Okay. I won't say never. I have traded gold in the past, but I could probably count on this many fingers how many times I've traded gold in the last year. So, but the numbers are undeniable, so it's time for me to set up a trade plan for gold. All right, well, let's not waste any more time on the introduction here. Let's just get right to it. So we'll go down over to our TradingView charts. Now, Edgeful subscription also comes with indicators that are, a lot of the indicators are built from their reports. Okay, so the initial balance report, they built an initial balance indicator. I'm sure there's other initial balance indicators out there, but with the numbers, the way we break the numbers down in the sub-reports, they've built their indicators to be able to take care of all of this for you. Now, you can manually draw these lines, but that takes time, and if you want to trade multiple assets and watch multiple assets, then you may very well miss a trade while you're trying to draw lines on another asset. This way I can have multiple assets up at one time, and whichever one sets up, I see it because my lines are automatically drawn on the chart. Okay, so I use the initial balance indicator and the opening candle continuation. I have some more in here. If I see numbers like even there was one spot on here where if the low is created first, and it typically breaks the high, but the percentage of that happening is a little lower than I like. So I put in my notes that I need more confirmation. if I see a setup like that that's possibly coming and I need more confirmation, then I'll turn on something like my SMAs, okay? And I'll turn on my SMAs and I'll get some confirmation. You know, if the low was made first and the high was made second, and I expect it to break the high first, then, which it didn't in this case, but let's just say, you know, we start doing this after a pullback from the high on a green 1 hour first hour candle, then I can see that my SMAs are in a position where I like them to be for a trend, okay? So when we get to here and we break the high, that is my extra confirmation, okay? My other extra confirmation is the fact that we fair value gap through the high, okay? So just to give you a little bit of explanation on that, because there are situations where I want a little bit more confirmation, okay? So we'll get started. With the initial balance, okay, let me get started with the opening candle continuation. All this is doing is measuring the first 1 hour candle, okay? And it's going to tell me if that first 1 hour candle is green or if it's red, okay? So you can see this diagonal line here. That is the indication of the opening price and the closing price of the first hour candle, okay? So it opened here and it closed here. So this is a green candle, okay? So that kind of shows me what my bias could be for the day. So I'm looking for continuation of the first 1 hour candle. Now this is going to do a couple of things for me, right? And I can show you what those are. Is our first break to the downside. Well, let me stop there for a moment. I'm getting a little bit ahead of myself. The other indicator that I use is the initial balance breakout, okay? And I'm going to pop the settings open for you here because I want you to see this. Number one, make sure you're on the New York time zone and make sure that your IB time is set correctly for the first hour. The session range is the New York session, okay? So this is going to be 9:30 to 4 p.m., all right? And you can do whatever else you want with this, the high color, the low color, the IB high, IB low. This also gives you the ability to have what I call the dealing range of the first hourly candle marked on the chart, okay? Because remember, one of the sub-reports tells us that when we break to the upside, how often does it come back to like the 25% of the IB range or the 50% of the IB range? So we want those levels marked out so that we can see if if we take the breakout immediately as soon as it breaks out to the upside, and that breakout fails and comes back inside the IB and stops us out, now we have a place where we can take a second entry, okay? Which is one of the major dealing range levels, the 25, the 50, or the 75%. I do not like taking trades at the 75%. In fact, I probably will never take a trade at 75% retracement of gold in the hourly candle. But the 50% and the 25%, if it bounces off of those and looks like it's going to continue, I will be happy to take a trade there. We also have some extension lines, okay? Because one of the sub-reports is our take profit max extension and average extension, okay? So here is where I want to put my average extension numbers, okay? And I have these listed in purple, so the maximum extension up was 0.3 and the maximum extension down was 0.45, okay? So I have those on the chart. You'll see the purple lines on the charts indicating those levels. But then we have levels, okay? One of the sub-reports is levels. When we break, how far can we expect price to move deviation-wise from the range of the initial balance? Half of an initial balance, a full deviation, which is the same range as as the initial balance or further. Okay. And I look at the numbers and base my numbers off the top two. Now, if we ever get to a part where, you know, 0.5 is 80%, point or 1.0 is 75%, and 0.15 is 65%, then I'm going to be marking more. But at the moment, right now, all I have, and this is your levels area, right now, all I have marked is the 0.5 and the 1. Okay. Because once we get to the 0.5, the odds of going to one full deviation from the range, it drops significantly. So I don't want to be targeting the one deviation. I want to be taking off the majority of my profit at the 0.5 deviation, and then maybe leaving a runner if I can to get to that second level. Okay. So that's what that looks like in the settings. And you can see on the chart all the levels that are marked out. Okay. So we have our IB low with the big thick red line. We have our IB high. And then this highlighted area is our levels. So you have the 0.5 deviation and the 1 deviation. Okay. And those are target levels to reach for. And you also have our extension levels here as well. Okay. So basically what I want to start out with is 1 micro. Okay. Because I want to see where it sits when I'm looking for a $125 loss and a $250 win. I need to make sure that on an average amongst several days or a month, that stop loss is sufficient. Okay. If that stop loss is too big, now I can go to 2 micros and shorten my stop loss a little bit or leave it like it is. Okay. So we're going to test this out. So the first trade, and this is November 21st on Friday, the first trade would actually be the breakout to the upside. Okay. Now, what does it say about the retracement? All right. If we break to the downside, there is a 66% chance that it comes back to the 25% level. Okay. So you have 2 options here. If it's showing strength, you can take it on the break. Okay. If it's not showing strength, then you could take it, wait and see if it comes back. Now, what I like to do is, depending on the numbers, if it has a high probability of coming back to the 25, I would like to wait for that level to be hit before I take a trade. Okay. Just simply because I don't like taking the first loss. First trade is a loss. Okay. And with gold being something I have not traded a lot, I'm going to wait for the A+ setups. Okay. So gold is telling me that retracing to the 25% level, regardless of if we break the high or the low first, is a good area to take the trade. Okay. So we break out to the downside and we immediately pull up and we blow right through the 25% and we hit the 50%. Now this is what I'm going to do in this case, because the 50% still has some decent numbers on it, but we fair value gapped from this low when we swept all this low and all this low. This is a 1-minute chart. Okay. When we swipe these lows and these lows and we push down to this low, okay, where there's a big fair value gap here, then we immediately skyrocketed back up. All right. And since we broke the 25 level with a fair value gap, What I want to see is us come down and invert this fair value gap, maybe even wait for another break of the low before I take the trade, because we surpassed the level we wanted to take the trade at with a fair value gap, which is showing strength to the upside. And if I follow that trade plan, we keep bouncing off the 25, right? And I'm looking for a close through the 25 with a strength. So basically, I'm looking for a fair value gap back through the 25% level, okay? And we never get that. We do get a couple of closes. We get a strong pullback wick here, and then we start moving up, okay? So we've broken the low, and it's failed to come back before it starts heading up. And I can see this curve, okay? So I know the 9 SMA is now following this curve on the way up. And we fair value gap here, but we can't break the high. And then we fair value gap through the high. Now that shows me strength, okay? So what I'm looking for here is the close that creates that fair value gap, and I want to trade to the long side, okay? The low failed. We have a green opening range candle where we've swiped the lows of that candle and had an immediate reversal. This looks like a liquidity sweep to me, okay, to take price higher. And by being patient and not just setting an order at the 25% mark, I have allowed myself to stay out of a bad trade, okay? So then we get a fair value gap to the upside. So with the 1 hour candle being green, I'm looking for continuation of that candle. We get a swipe of liquidity before below the candle, chop around, and now price is starting to curve up into a trend, right? Okay, so I'm going to take this trade as soon as this candle right here closes, and I'm going to trade it to the long side, okay? And that's an up candle. Grab my keyboard so I can lock it in directly at the open, okay, right there. And I'm going to put on my, oh, I don't have one for this, settings. Profit is 125, 250, 250 ticks. Stop level is, stop level in ticks is 125. Okay. And we'll save that as GC. I have one already for the shorts. I just didn't build one for this. Okay, so I'm looking for a stop of $12.50. Okay, and I'm looking to make $25. Okay, now on a 1 minute chart, I can see that this is way more than enough of a stop on this day. Now, there may be bigger initial balances, right? Because Friday isn't the best day to be trading this, all right? According to our sub reports that we pull on Edgeful by weekday. So I'm not going to make any conclusions just by looking at this one day. I'm going to go back a few days, and if I get through a full week of realizing that this stop is too big, then I'm going to come back and I'm going to change things, okay? So, but right now, what I'm looking at on one contract is I'm looking at a $125 loss and a $250 win. This is my typical trade that I'm looking for, okay? And as you can see, we did not make it all the way up. But what you can see is that we hit the 0.5, we hit the average push to the upside, okay? And we also hit the 1, okay? And this looks like we probably hit the 1.5 and then fell over. But what happens on these kinds of trades is that once we break major levels, I want to see those levels hold. Okay. So as soon as we broke the 0.5 and we got this big bar, I am moving my stop just below the purple average extension. Okay. Or I can decide to just take the entire trade right here, but I'm not going to do that. We push up even further. We come back and retest, and then we start pushing up again. Now my stop is going to come just below the 1 deviation line because we've already tested it and we broke the previous high. So I'm looking for continuation up to the top of my trade. So obviously I'm going to get stopped out right here. Okay. And that's okay. A win is a win. I'll take it regardless. All right. I'm either going to make the 250 or I'm going to get stopped out in profit. Either way, I win. I'm not worried about it. Okay. And that was it for the day. I need to turn on my market sessions as well, so we can look at the entirety of the New York market. We then held that. We fair value gapped through the initial balance high, taking out these lows with a fair value gap. And you honestly could probably say we're going back to the daily lows at this point. Okay. Big push up, come back, consolidate, manipulate, distribution back down that starts off with this big fair value gap. Okay. And we could take a trade at this 25% level here, risking, a typical risk, and probably cover that entire fair value gap with our risk and trade that to the downside to get more profit. But I don't like trading in the afternoons. The breakout is what I'm looking for, and I want it to either win or lose. Okay. So let's go to the day before this and take a look and see what we've got. All right. So I already have this one marked up. And as you can see, we have another green first hour candle that breaks to the downside. Okay. So we break to the downside, and now I'm looking to trade here at the 25% level. And as we're coming up to the 25% level, we're not coming up strong. Okay. We got a nice little reversal from this level after we swept some lows here, but we didn't break this low here. So now we're getting a little bit of a pullback, and it's not a strong pullback. So when I say that, we're getting pushes down on these up candles that have very small bodies. We don't have big up bodies to deal with. Okay. So I am more likely at this point to put in an order just below the 25% level and see that my $12.50 stop puts me above the 50% level. Okay. So price could come on, continue, hit the 50%, even wick through it a little bit and still be safe, because our continuation to the downside numbers are pretty strong when we break the downside at the initial balance. Okay. Again, I don't have to worry about marking anything out because my 0.5, my deviation levels are marked out. My extension levels are marked out. My dealing range levels of the first hour are marked out. So I don't have to worry about doing any of that. All I have to do is watch price action. Okay. So could very well set that order there. Now, if I want more confirmation, I want to see something happen at the 25% that says we're going to reject that 25% level. And we get that here. Okay. So let me widen this out a little bit so it's a little easier to see. And so you can see that we have a fair value gap created right here to the upside going into the 25% level. Okay. As soon as this candle closes, the 11-12 candle closes, we have now inverted that fair value gap. And the very next 1 minute candle shows that we've created a bearish fair value gap. Okay. So that is our inverted fair value gap. And then here is our bearish fair value gap that was made in the process of inverting the bullish fair value gap. Okay. So that in itself is enough for me to take the trade there. Okay. And that is good confirmation. All right. So we can enter at the top of this candle here, and I can see that at this point, my stop is rather large. But here's the great thing about this trade. We consolidate for a couple of minutes, and then we come back and we retest this fair value gap. And when we push up to it, let me just move this off here. When we push up into this fair value gap on the up candle, and we touch that fair value gap, and we immediately get a bearish engulfing candle, that is my signal to add to this trade. Okay, because not only that, that bearish engulfing candle closes below the initial balance again. Okay, so I can add another contract there. What this is going to do, because basically when I enter the trade here, okay, on this candle here, I can already see that my stop is too high. I want to see this 25% level hold, and I don't want to lose any more money. Now, structurally, this stop is more stable because we are above this high, and we're right at this high, okay? This is the immediate high that was made. But because of the way this high was made, bullish fair value gap, inverted bullish with a new bearish fair value gap, okay? That is a rejection that if it doesn't hold, we are going back up, okay? So I can immediately, once I place that trade, pull my stop down to almost half, okay? So instead of 125, I'm probably risking $65 to $70 here, $70 to be exact, okay? This is $10 per point, or per dime, okay? So, and with one micro, it would be $1 per dime. So 70 ticks would be $70. Okay. So I'm risking $70 on this trade. Then I immediately get a signal to add right here. And if I added one contract, our average price would be probably just above the initial balance low. Okay, so if we were to pull that down and say, okay, well, that's going to be our average entry price now. But now we're going to be in two contracts. Okay, so we can come over here and now hit two contracts. Well, let me reset everything. There we go. Now we can reset and do two contracts. And now we're risking 182. But the point I want to hold is down here. So I can now reduce my risk again immediately after I add to the trade. Okay. And bring my stop just above that high. And if I do that, and now we're looking at two contracts, my risk is only $86, $16 above my original risk on the trade, but now I'm in two contracts. And you can see that I don't need to make it very far to get my $300 in profit on the day, okay? So my $300 in profit can now be made right there instead of way down here, okay? So I can pull my take profit up to $300, and now my average price is here. I only need 15.1 points or 151 ticks to get my $300 profit. And we actually hit that profit a lot sooner than we would have if we just had one contract on. this is how I manage trades. Now, you have to work out your own trade plan, what you feel comfortable doing and what you feel will work. Okay. I've traded ICT long enough that this is a very strong signature for me to trade to the downside. Because I can even add one more confluence here and say, well, what was the fib level of this push down? And I can see that we are right at the 6270, which is the OTE entry. And this candle just barely closed above the 70 and then got rejected. And we did the fair value gap thing and all of that. Okay. Then we came up and retested the fair value gap, got our add into the trade. All of this I've seen hundreds and hundreds of times. Okay. So I expect it to hold. Does it hold all the time? Absolutely not, because nothing in the market is 100%. But I've seen this enough to know this is how I need to manage this trade to get my profits quickly and be out of the trade. Okay. So the trade was entered on the 11/12 candle, and before it's all done, we're out of the trade at 11:31. Okay. Almost 20 minutes. So we're at 19 minutes and we're out of the trade. All right. So that looks pretty good to me. So let's go down to the day before. Where are we at on time? We're at 30 minutes. Okay. So you get the gist of what I'm doing here. Now, if you're new to trading, what I would tell you to do is just wait for the break. Take the trade immediately at the break so that you don't have to figure all of this out. Okay. Take the trade immediately at the break and then see if you hit your target. And lo and behold, you don't get stopped out with 12.5 stop. Okay. $12.50 on your stop with one micro contract. And you're targeting $25 for your take profit. And that's all you need to do to make your $250. You don't have to do all the crazy stuff I did. Okay? If this trade fails, you can, and it holds the 25% level for whatever reason, because it's a bigger initial balance. If it fails, but it holds the 25% level and comes down and breaks it again, take a second trade on the second break. Okay. If it holds the 50% level and comes down and breaks again, take the second trade short on the second break. It's holding its levels and coming back down. Very good chance of continuation on that trade. Okay. Even if you get stopped out on the first one, very good possibility the second one catches your continuation that you're looking for. Okay. Make it simple. Don't worry about how I manage trades. Get the experience in first. Okay. And you can go back and back test this on your chart. Okay. See if this simple one micro contract works. Take the break of the high or the low and then put in your risk, however much you want to risk per trade. Okay, and how much profit you want to make each trade. Don't get greedy. Base hits, make money over the course of a month. Okay, because I'm going to show you that later on. Once I build the trade plan and we go back through the month of November, I will have a video that shows you the profit and loss from those trades. Okay, and remember, I'm only trading one micro right now. Okay. You have to back test it at the smallest size, still making the money you want to make. Oh, Jesus, what the hell? Making $512 there. And just start with that. Run back through a month's worth of price action. See how that works out. See if your stop loss is too big. Make adjustments after you see that. Because if I get the win rate I'm expecting out of these trades, just simply taking the first break, okay, I won't do all the crazy stuff. I won't be looking at fair value gaps, this, that, or the other. If I can take the first break over the last 20 days of trading and it makes the profit that I'm looking for it to make, that's all I'll do. I'll take the break. It'll either stop out or it'll win. And if it stops me out and it breaks again, I'll take the second break as a second trade. And it'll either stop me out or it'll win. Okay? And that's all you need to do. It's very simple. I did that with YM. And over the course of 20 trades, or not 20 trades, but course of 20 days, from October 21st to November 21st, that process made me, I've got the numbers already written down here. $2,273 in a month. And I have six funded accounts. That's over $12,000 in a month. So you get the gist of it. You see how to set up the trades. If you've got experience and you've got other ways to read the numbers, then you can wait for the pull. You want to wait for the pullbacks, or you want to add to your trades at when certain things happen, like I just showed. I could add to this trade. Then by all means go for it. You know, build out your trade plan and go back and look at the market. Okay. If you know you're disciplined enough to add to the trade when this happens, then do it that way in your back test and see what the profitability comes out to be. I am going to run this the first time through on just taking the break when it happens with 1 micro, 12.5 stop, 25 target, and see what happens. Okay? Because the simpler I can make it, the more assets I can track. And if I can take 3 trades on off of 5 different assets when it sets up, I'll get to my $300 per account very quickly. Okay. So I'm going to leave this video here. If you want to check out the first 2 videos again, I'm going to post those up here. It is in its own playlist, so you can check out the entire playlist. This is part 3. Part 4, I'll come back and show you the P&L of the simple trade. And if that's good enough, that's as far as I'll go. I don't need to go back and do, look at fair value gaps or levels or anything like that. If the simple trade works, that's what I'm going to use. Okay. So I'll see you in the next video. Again, do me a favor, everybody. Like the video, subscribe to the channel, and leave a comment below on what you think. You can also catch me streaming live every day at 9 a.m. on YouTube. I don't charge for anything. The YouTube, I'll even throw a link to my Discord down below as well. If you want to come in there and chat and talk or ask questions, feel free. And the link to Edgeful is also down below. So go check them out. It is an amazing tool to have, and watch the first and second video to see how amazing that tool is to be able to figure out how to build your trade plan on the charts, and so you can go back and back test it over 20 days and see how it does. So until then, I'll see everybody in the next video. Until then, stay blessed.